Good morning. It's September 12th and welcome to the Coinbase Institutional Markets Call. Markets have been a little bit soft this week and there's still no spot ETF, but just before we started filming, Franklin Templeton did announce that they are applying to launch a spot Bitcoin ETF. So we are still hopeful. David is out in Singapore this week, so hopefully he's going to catch up on some lovely food markets and maybe hit the Formula One. He is missed, but he'll be back next week. Greg, George, Sid, are you guys into food markets or Formula One at all? Anyone been to Singapore?
Yeah, 100%. Food markets all the way. Hawker markets have definitely always been one of my favorite parts about Singapore.
Nice. Do you ever go to that Michelin starred one? Because wasn't there like this little hole in the wall that had like a Michelin star?
Yeah, I know the one you're talking about. I think so. I've been there in November, but I think I missed that one, unfortunately. Actually.
Wow, feels like you need to
definitely on my list, though. Yeah.
Nice. So onto the agenda, we are going to be running through, as well as food markets, some of the court documents that came out and have been putting some pressure on asset prices. There's a ton of there, 35 pages, I think, a lot of information there. So the team's going to be running through those. We're also going to put a reminder for the potential ETF timeline, take a look at macro, and then an update on Friend.tech and other movements in Web3, especially around real-world assets. We're seeing some good growth there, so Sid's gonna cover that. Some quick housekeeping. Don't forget to like and subscribe. That is how people learn about the show and see the fantastic content that David and the team put together. If you'd like to access that content and you are watching on YouTube, don't forget to scan that QR code. If you are listening on Spotify or whatever audio platform you use to get your podcast from, that information will be in the show notes. But without further ado, let's get a quick market update from you, George. And I know that leads nicely into the court documents that we've all been leafing through over the last day or so. So, George, what's been going on in the last 7 days?
Yeah, 100%. So another pretty interesting week. We had JP Morgan announcing, for starters, that they will be exploring a blockchain-based digital payment system, with the idea essentially being to speed up cross-border settlement. Another interesting headline. So obviously you mentioned another application from Franklin Templeton for a Bitcoin spot ETF, but we also actually had ARK Invest and 21 Shares both filing for an ETH spot ETF. So that should probably come as no surprise, given the ETF topic has been really hot for the last 3 months or so, and really a myriad of companies have filed for obviously Bitcoin spot ETFs, and then in the beginning of August, we also had a number of firms applying for Ethereum futures ETFs. So that's just a next natural step there, I would say. Price action-wise...
Bloomberg had a good webinar actually on it last week. We'll post the link in the show notes. But the probability I think I had at 75% of a Bitcoin spot ETF. And with someone as large as Franklin Templeton kind of throwing their hat in the ring, it's hard to see that probability going down. And kind of as we spoke about last week, the discount to the I guess par value for Grayscale should in theory be closing as well. So yeah, one to keep an eye on.
Yeah, 100%, totally agree, and I think we've seen that with discount now. I think the last I checked was around 16%, so definitely quite a large move. And as you say, I mean, we've got now VanEck, WisdomTree, Invesco, Valkyrie, BlackRock, so literally all the big firms pretty much having filed for a Bitcoin spot ETF.
Nice. So what else has been going on, George, other than these documents we'll touch upon? And anything else you've been keeping an eye on?
Yeah, so price action-wise, just to talk through that briefly, the market has definitely been under some pressure, mostly going sideways. We had BTC stuck between 25, 26K roughly, and ETH down around 2% over the last 7 days. Altcoins as well, in particular, under some pressure. So if you look at the likes of Solana and Aptos, for instance, those were down around 8% over the last 7 days, which comes essentially, as you mentioned, the FTX court docs, and essentially this price action comes on the back of a lot of talk about FTX soon potentially looking to start liquidating some of their digital assets as per court filing, which actually just got published, with the aim being essentially to complete the bankruptcy process in Q2 2024. For our listeners there on the chart here, you can see that certainly the largest portion is Solana at more than 1.1 billion book value. And next we've got Bitcoin with about $500 million.
Interesting. So maybe let's get into that, and Greg would love to bring you in as well. I know you and George have both been deep in these documents, although I'm not entirely sure if you've been deep into them, looking at Bahamas luxury real estate. But regardless, what is the timeline for this? Like when could they potentially start selling?
So the way it stands right now is they put forward this plan. The U.S. trustee has objected to the plan. They're the only one that's objected to the plan. They now go in front of a judge tomorrow, September 13th, and that judge will decide whether or not this plan moves forward. That could be, that decision could take a day, a week. We don't really know, but it's likely to be, relatively quick. And then it's up to the debtors when they want to start. So they don't have to start right away. They could wait. They have some freedom there. So
we will hopefully find out a little bit more tomorrow, and I'm sure markets will be keeping a close eye on that. I'm curious, the US trustee declined or objected to the plan. Do we know why that was?
Yeah, really, their objections were around disclosure. They didn't feel like there was enough disclosure. When you're in a bankruptcy, everything needs to generally be filed with the court and disclosed to all the creditors. The debtors have said that, if they were to disclose everything they would likely do, they could be front run, and that would obviously be detrimental to the estate. So that's what they're going to court to discuss.
Got it. Understood. And George, what is the breakdown of the portfolio? Like, what are some of the assets that we should be keeping an eye on specifically?
Yeah, so as you would imagine, it's a relatively complex portfolio, including a myriad of things such as cash, equity investments, liquid digital assets, as you've just seen on the last chart, VC investments into funds, early stage tokens, and many other things. I think in terms of the relevancy, the most relevant items for traders are, I would say, obviously the liquid tokens they hold, such as Solana, Bitcoin, ETH, Aptos, and so on. Outside of that, obviously, there are many other longer tail tokens that it's also worth keeping an eye on. And interestingly, they also hold about $417 million worth of GBTC and about $70 million worth of ETHE as per the court filing. But I would definitely highly recommend for our listeners to go through the doc if you're interested to see a full breakdown. It was super interesting reading through that, and it's publicly available on the web.
Yeah, we'll post the link in the show notes. What I found interesting is there was 1,300 assets that weren't named, that I think with a long tail. I mean, that's a long way out on the risk curve, which I guess is not that surprising now. But
So there are 1,300 assets. However, after I think we have a slide if we could pull that up. So yeah, here are the category B tokens. And you only need to get to about the 10th largest token, or what is that, 15th largest token, and the size gets pretty small. It's about 3 million at that when you're the 15th largest in the category B. So as you get to probably the 100th largest and so on and so forth down, I would imagine the size is de minimis.
For sure, yeah, definitely some dust in there. I guess it's all, as you know, it's all going to be in relation to its ADV, average daily volume. If these things aren't trading, then it's going to be interesting as they try and sell them. But regardless, certainly something to keep a very close eye on. Curious, so GBC and ETHE portion and the market impact. Obviously, we've been talking about that discount, and George mentioned they hold close to $500 million of these as per the filing. Greg, given the recent price action, liquidities, opportunities around ETF filings, like how are you thinking about this?
So I read through the court filings, and they're all very long documents. But on the first pass, I didn't see any mention of actually, how they're going to handle GBTC and ETHE. most of the talk was around the digital assets and whether they'll be, selling, hedging, or staking those. And as you said, I think everybody would gain from getting these documents and reading them because there's a lot of great information in there. As far as the GBTC discount, that has tightened from last week. It's now at, as George said, about 17%, which again puts about a 70% probability on an ETF being approved. So, it still looks a little wider than I would expect it. But again, we've talked about, some of the difficulties around hedging and the capital costs. So that's likely why we're seeing it trade where it is.
Yeah, that makes a ton of sense. And what about the broader recovery? Like, where are these claims trading right now?
So the claims are currently trading at around about 30%. So I was checking this morning on OPNX. There's actually two trades, I think, over the last 24 hours. One at around about 27%, and then the other one at around 31%. The order book, to be fair, is pretty well bid, between 20-27%. Not that much on the offer, but I think, in terms of price discovery, fair middle is probably around 30%, but we haven't really seen a big spike in trading activity, at least on that venue yet. So, but it's a very interesting situation. Obviously, we have a lot more information with the availability now of those court filings. So maybe it's going to be quite interesting to monitor that over the next 2 weeks or so and to see whether there'll be any material moves in the market there.
Yeah, that makes sense. I guess another thing we should be keeping an eye on is the restart, like FTX 2.0. I guess it's now been coined. Like, how would that play into the claims, and what's the latest on that as well?
Yeah, so I think first of all, one of the things that you have to keep in mind is that I don't think there's a clear definition of what FTX 2.0 would look like, but there are obviously various options. So it could be pure claims trading, similar actually to OPNX, for instance, in US dollar terms or pure crypto. Another option obviously would be the sort of complete restart of the exchange as it used to be, which would probably be a lot more complex. And for that, you would probably need a group of bidders with experience in this business, and would also probably require a lot more capital. Actually, looking at that second option, if you look at the court filings, they were saying that they have spoken to 75 bidders. These could be exchanges or other strategic buyers, for instance, and several parties that have submitted bids in the first round of conversations were admitted into the second round of the process, where their proposals are essentially now being evaluated. But they state very clearly in the docs that were published that essentially the transaction timing is very open and will depend on the readiness of the bidder among various other factors.
That's great, George. Yeah, certainly a lot for us to keep an eye on in the coming weeks and months as these plans evolve. Now, one would assume that the party that are liquidating these assets have to be responsible in the way that they do it and minimize market impact while maximizing proceeds. I'm curious, is there anything in the documents that details how it needs to be done?
Yeah, there actually is. So I think we have a slide that has the actual language up. And I think this is really important because yesterday the market, essentially, in my view, you overreacted to this news that FTX could likely start to liquidate a portion of their portfolio. And this is why I think it was an overreaction. They are bound by a weekly limit. That weekly limit is likely to be up to 100 million for each week, Saturday through Friday. It can go as high as 200 million for 1 week. Then it has to go back down to a slower pace. And if they want to go higher, say to 200 million week after week, they need to file a notice with the court. So what that tells me is that they'll be selling likely 100 million, maybe up to 200 million during short periods of the time. And if they want to sell any faster than that, we're going to be publicly notified. And when you think about just how big the crypto market is, and how liquid some of these assets that they hold are, 100 million to me per week really doesn't seem all that impactful.
Just one other thought to add in this context, and I think which is key to keep in mind actually, is the vesting schedules. So obviously with a lot of these numbers of assets to be liquidated being thrown around, for instance, if you look at Solana, for instance, the majority is actually locked up for years. But obviously that's not to say that you can't do OTC trades and locked tokens to reduce exposure. But still an important thing to keep in mind, and probably also important to keep an eye on funding rates and perps.
For sure, yeah. You've got to imagine the funding rates are going to be a good way of figuring out what's happening here, and also potentially some of the options flow as well, if they're looking to kind of protect on the downside. Interesting. So moving on from FTX, hopefully the whole space can do that as quickly as possible. On to macro. So George, what are some of the things that you're keeping an eye on in macro in the coming weeks?
Yeah, sure thing. So just looking at the curves, obviously US curve is continuing to bear steepen. So 2-year, 10-year at -70 now, with 10-year around 430. We've got the US CPI coming up this week on Wednesday with a median survey on Bloomberg, seeing a drop in core inflation, interestingly, from 4.7 to 4.3% year on year. At the same time, while an increase is expected in the headline number, so expecting 3.6% there versus 3.2% last month, which essentially, I think, or one of the factors that could be contributing here is energy prices, or oil prices more specifically, with oil actually, if you look at Brent, for instance, trading at the highest levels since November last year. So Brent pushing above $90 here on essentially OPEC plus, i.e. mostly Saudi and Russia cutting output. Staying in the US, obviously we had some comments from Yellen, who was saying that she's pretty confident that inflation will be tamed without too much pain for the job market. And actually, we've also seen that sort of reflected in the euro-dollar curve and the expectations for rate cuts next year. So for instance, if you compare now versus a month ago we were expecting roughly 130 basis points of cuts until the end of next year. And right now, we priced out some of that, and the expectation is around 90 basis points of cuts. And then last thing, obviously, we'll have the ECB rates decision on Thursday. So another thing to keep an eye on. Got roughly half a hike priced in, and cumulatively, we are pricing somewhere in the region of 22 basis points of hikes until December in Europe.
Great, thanks, George. And Greg, would love to bring you in here. Like, what else? Is there anything else that you're looking at, and what do you make of all this in relation to crypto and our markets?
Yeah, so I mean, what George laid out is, that's generally the calendar. I think CPI is always the big one, obviously. So we'll be focused on that tomorrow, along with the ECB. But recently, crypto hasn't really responded to macro data the way it did last year. And we can even see this, on CPI release dates, in early 2021 and kind of through last summer. Early 2022. Wow. And through last summer, those were big days, and we saw implied vols, reflect that. Now, unless we got some number that was completely out of left field, I'm not sure it would have that much of an impact on our market. Crypto's right now more focused on, the regulatory situation. So what's happening in the courts and flows, what's going to happen with an ETF, Mt. Gox, FTX, things like that. So it's definitely something we'll continue to keep an eye on. I just think it's maybe less impactful than it has been in the recent past.
Interesting. That's great, guys. And I guess while we're kind of looking at timelines, maybe just a kind of a quick update on the ETF side of things. Are there any more dates or new dates we should be keeping an eye on, or is it the same as last week, Greg?
So yeah, it's still pretty much the same. The SEC has until October 13th to decide if they want to appeal the Grayscale case. And then a few days after that, I think the 15th, 16th, we get to round 2 of a number of these ETF applications. So it's September 12th. We have about a month where we're going to have to trade on other narratives between now and then.
Great. And Greg, while you've got the mic, flows, what have we been seeing on the desk in the last 7 days?
Yeah, so yesterday, like I said, was all about FTX and what could possibly come of that. We did see some dip buyers come in kind of later in the day, mostly in the majors, and even in that cohort, really concentrated in BTC. And I think that makes sense. When the market's stressed, you always see a flight to quality, which is what we saw yesterday. No one was really willing to catch the falling knife that was Solana. Today, we're seeing a bit more balanced flows, but still skewed to the buy side. And I would expect, as we go through the end of this week and into next week, and really until we get to mid-October and some of these dates we just went over with regards to the ETF, I would expect it to be pretty range bound.
Right, well, it's good to see a pickup in the volumes on the chart there. I mean, summer's always quiet, unsurprisingly, and there's been a few catalysts that have given us some periods of higher volumes, but obviously, hopefully that continues to increase. Greg, anything else on the flow side of things? Any kind of interesting conversations with clients or new trades people are looking at?
Yeah, so we took a look at market positioning earlier in the week, and this was pre the FTX reaction. And we actually put out a report. If you need it, reach out to the desk. But positioning overall, especially in the alts, looks relatively low, and it actually skews short in ETH, Solana, and Matic. So just something to keep an eye on whenever positioning does get very low, especially in majors like ETH or skews short. You do run the risk, if you will, of a rebound in the other direction. So something we're keeping an eye on. And other than that, people are still very focused on the GBTC discount that we already went over. I think that does still seem like a really good opportunity. It seems mispriced in my mind. So long as you can figure out a way to efficiently hedge it.
Got it. That makes sense. We'll add the market positioning note to the show notes so people can read it. These notes are great, so I really recommend you take a look. It's one of those ones where it can move very quickly based on events that come out, whether it's a legal ruling or something like that, but provides a great insight into how people are thinking about the market at a particular point in time. So moving on, thank you for that, Greg. Sid, what is the latest in Web3? I guess maybe let's start with the Friend.tech update. I know you've been toying around with that a little bit, so how's that been going?
Yeah, it's been fantastic. It had a little bit of a dip in action the previous week when there was a bit of a controversy around Friend.tech clones being launched and things like that. But it's picked right back up from this weekend, following through to this week. As you can, for folks watching via video, there's a chart up showing the TVL growth of the platform. It's crossed $20 million now. It's hovering around 22 million. A lot of crypto influencers and the crypto native community is really hopped on with vigor and come on. There were some participants from other industries as well, but they've mostly left. And at this moment, it's really just a crypto native app. A lot of folks posting regularly, and I think a lot of what's driving this is this release of points every Friday that Friend.tech is doing, which a lot of folks are attributing to a potential for an airdrop related to those points. So folks are trying to just be active on there, and then genuinely just because there's also the social element in terms of chats and conversations happening on the app itself, it tends to bring users back. So in terms of metrics, there's around 10,000 plus active users every day coming back to the app, which is pretty significant, especially with TVL growing at this rate. And it's one of the most active dApps overall, period, across L2s.
Interesting. So I'm going to play devil's advocate here. So we had some folks that weren't in crypto that came across to it. They've now left. Well, I guess we're all searching for this killer app that like crosses the chasm and brings Web 2 to Web 3 and like kind of helps everyone grow. Have we already seen a sign that this is not going to be the app on the basis we've had some folks come and go?
I think it's a little early to tell, to be honest. There's been a lot of, even within Friend.tech, there's been a lot of conversations that I've been seeing in terms of what this could become. I think the building blocks are kind of there in terms of account abstraction, built on Base with cheap fees, the tooling where you don't have to necessarily even know about crypto. You could deposit USD. A few, drawbacks of Friend.tech at the moment are the bonding curve, the way it's structured, the product itself. When you buy keys of a given account, it's very expensive to buy and sell to get in and out. So it takes over 10% fees each way. So it's pretty expensive. And so folks aren't incentivized necessarily to make rash moves. And because it's crypto and because there's money involved from the outset, the prices of several keys have been driven up to pretty significant levels for an average person to even consider buying in. For example, the top key, it's Racer, 0x Racer, the founder of Friend.tech, is going for around 6 ETH now, which is pretty significant if you wanted to just try out an app, right? So I think it kind of depends on where it goes from here, how they involve it. Folks have suggested including, for example, onboarding the Reddit community. Right now, it's targeted towards X and Twitter. Potentially, they onboard the Reddit community to port over their social accounts. Potentially, folks are saying maybe they can use the FT points as a sort of Patreon to raise funds for projects or entrepreneurial kind of initiatives where folks want to raise funds, capital allocation. So there's a lot of ways it could go. It maybe doesn't look like a traditional social network, but interesting to see.
Interesting. And that 10% spread you mentioned there, presumably those fees go to the protocol?
Partially, and then partially also to the user themselves. Of
course, yeah. What is that split? So what goes? So like, if I buy one of your keys, which I have, thank you. So if I buy one of your keys, you obviously get a certain amount of commission. Like, what is that as a percentage versus the amount that goes to the DAO? I guess.
It's pretty much split in half. So half goes to the user, half. So some of the most popular users have garnered significant amounts in fees, well over $100K, $200K dollars in fees.
Interesting. And then help us understand, so 0x Racer, 6 ETH, what does that get you? Like, what is the benefit of that? And obviously, there's people at lower price points where you can buy for probably $2 or $3, and obviously not sort of $7,000, $8,000. But what does it get you if you were to spend on one of these people?
The core thing that you get is just access to their chat room where you can converse with them, ask them questions, etc., and just have a one-to-many conversation with them, so they can see all of their key holders' chats, but the key holders can't see each other's. So it's kind of, you just see the responses of the person that you've bought the key of. So it's an interesting dynamic there. It lends itself to influencers and folks with larger audiences, but it also somewhat caps it because Racer is nearing around 200 plus holders, and it's at 6 ETH. So realistically, there aren't that many holders who can above this that can pay increasingly higher prices for a share of this chat room, right? So potentially relatively smaller room sizes at the current state, leading to kind of more intimate conversations, which some folks say they like compared to, say, the X or Twitter experience where you're just shouting out into the public melee of Twitter, right? And then you have all these bots and spam and other things like that. Yeah,
it's interesting. I can somewhat see the benefit, but like there's just no scale to 200, and you're like 6 ETH. That's I see your point. It's a real struggle. I know we won't spend too much time on it, but I know there's people that are fractionalizing keys. There's aggregation of keys. There's all this kind of primitives been built on top, which is so Web3, and I love it. But yeah, curious to get an update in the coming weeks from you on that one. But we'd also like to switch gears and move on to real world assets. We've had a bit of news there. Templeton are obviously, we mentioned earlier on, they're engaged here as well. What's some of the latest updates here?
Yeah, it's kind of a pretty growing trend we've seen come online over the past few weeks, even months, starting with the conversation from the DAI savings rate from Maker, which started at 8% yield and it's now around 5%. So more and more folks are just trying to bring the kind of US T-bill interest rate on chain. If obviously folks who are around for the bull run, that was one of the biggest draws of DeFi, which was stable coins could get significantly higher yield than what one could get with real yield in other traditional venues. And so now with US Treasury yields being so high, there's players like Maple Finance and Ondo Finance trying to build tokenized versions of UST bills and represent them on chain. So Maple Finance had a recent regulatory approval to offer it to US investors as well. Previously, it was just non-US investors. And they have kind of a KYC gated mechanism to mint shares, to mint tokens that basically give them 5% yield. USDC, they can deposit USDC and USDT. And then today, Ondo Finance announced the launch of their token USDY, which is again, tokenized kind of T-bills, but specifically they partnered with Mantle. This is a L2 that settles on Ethereum. It was started by BitDAO, which is one of the largest DAOs in existence, multi-billion-dollar treasury. And they did a partnership where they're launching the token on Mantle and BitDAO. The Mantle kind of ecosystem is committed to support it with $60 million from their treasury. So it's pretty significant. And, for folks watching on the video, you can see this graph. It's kind of trending up and to the right. The Mantle news isn't quite reflected here, but plenty of real-world asset, based projects coming online and growing as well in terms of capital.
Interesting. And am I right in saying that Templeton are mainly on Stellar? Is that right?
Yeah, that's correct. I think that's also an ecosystem-based agreement. This is kind of a grab, to be honest, with Mantle, with Stellar, with other L2s as well. There's a lot of discussions going on where, especially those who are treasury rich, will try to have a share of this pie because this is a big draw for large asset holders, especially the large stablecoin holders, right, to generate yield on chain.
Yeah, that makes a ton of sense. There's another chart that we're looking at prior to the call on the website, rwa.xyz, which shows the growth, and it really is kind of up and to the right. So yeah, feel free to take a look. And thank you very much for that, Sid. That's a great rundown. Appreciate your insights as always. And that is a wrap for this week. Thank you all for joining, and we'll see you next week. Take care.